Hello and welcome to the Pipnotic Symposium for the 6th of February 2018. Today we are going to have a look at the trades that we put on last time. All the trades we put on last time, they were test trades with a risk reward of 1-to-1, and all trades with a risk reward of 1-to-1 are going to be our test trades. What we're going to do, as you noticed in the first video in this series, is that we eyeballed a chart. We found what appeared to be really nice areas of supply and demand, and we put on an order without really asking too many questions. And we're going to continue moving forward in this way. What I've done yesterday morning local time, I did the same thing, but I was paying attention to one small detail, and luckily many of these trades have been filled and they've already finished, and so this is good because I was hoping to have a few of these trades ready to show for this video, so number 2 of the series. So what we're going to do, first of all, we're going to go through all of the trades that we put on during the last video. We're going to have a look at every one of them, and then we are going to look at the new trades that I put on yesterday. There was a slight improvement on the trade, and we're going to see how they did, and then we're going to discuss the different reasons why some of these trades are good and some of these trades are bad. And you'll notice that I've actually filtered it out, but one of the bad trades or less optimal trades was a profit trade, and I was hoping that wouldn't happen, because if you're putting on bad trades and they're winning, well, then you're psychologically associating bad practice with positive emotion, and this we want to move away from. And so I was thrilled that all of these trades lost, because this is ultimately what we want to see when we approach the market as we did during the first video. Okay, so let's walk through all of these trades. I'm just going to go through them one by one. I'm not going to spend too much time on them, and then we're going to point out a detail in these trades that will help us understand why they were less than optimal. And then we're going to move on to the next set of trades, which are the ones I opened yesterday. We're going to look at those ones one by one and see how they did and why they potentially did better than the ones in the first sample. Okay, so if we take the first one here, we'll drag it onto the chart, and you can see that this was the trade. Let me just apply this template so we clear everything off. Delete everything. Good. So you can see that this one was a short just here. So we sold just here. So the price was moving high. We had this really nice looking area of supply. We had this upward sloping trend line. It was broken. What area of supply broke it? This one did here. So we wanted to sell here. So we put a sell order in here. Price accumulated just below this area of supply. We'll take this one here, and then price cut through it and moved higher. So that was a losing trade. Good. Let's have a look at the next one. This is a buy just here. So we had this area of demand. Price left, we moved above these highs, we came back, we tested it, and when we left, we moved higher than this previous swing high. So we formed a child demand, this being the parent, and we wanted to trade the child. So we took this trade here. So price came down, we poked in the air, we consolidated within this area of demand, and then price cut through it and hit the stop. Went to the parent, the lower part of the parent, and this is where we saw the reaction before price continued moving lower. So another losing trade. And if you want to know the thought process behind these trades here, then simply go back and re-watch the first video, because we go into more detail as to why we decided to take these trades in the first video. Okay, here we have another one. This one here, we bought here, and this was because we had this area here. We'll take the bodies, which is what we've done. We put an order in just above, and then price came down. We tested it once. On the second test, price came down. We went through, and then we found liquidity necessary to drive price higher below this area of demand. So this is very interesting to us. As a matter of fact, I'm going to spend a little detail on this one because this is a very interesting trade and something we have to pay attention to. Okay, this whole price structure, I'm just going to kind of mark it off like this. This whole thing here, since the release, is standing on this leg just here. So when price left, it kind of moved higher and it came back to this level initially and then a little bit deeper next one, and this is where price drove higher. So the origin of this move is actually goes all the way back to here. Initially it would bring our attention to this area here. So as a matter of fact, I mean, we were buying here, so this didn't exist. So let's focus on this. So price did not exist past here. So all this to the right of the line, the vertical line, did not exist. So we have this move, it went higher. The origin of this move is here. And notice, this is a super important detail. Notice in the leg that left, price went up and we had a wick that came down and then it went up again. Okay, so we're going to mark off all these pullbacks. And the reason this is important, this is because this on this time frame simply looks like a wick that goes down, but on a smaller time frame, this is a pullback. Okay, so pullbacks do what? We have an area of demand here. Price accumulates, we leave, it pulls back, and then it moves higher. What is this pullback doing when it comes down like that? We'll go back to our usage of the whole pancake thingy. So we have pancakes here. We'll move our pancakes up to here actually. So these pancakes, they represent pools of liquidity. And so each time a buyer, a hungry buyer, comes down to take a pancake, or consider this to be a fork, it's taking a portion or the portion of the first pancake that's on the stack of pancakes. Okay, so each time that happens, the number of pancakes available goes down. So you notice the one on the top here disappears, and then the next fork has to come a little bit deeper to find the next pancake, / the next pool of liquidity. And once that's gone, well then price has to go deeper and deeper and deeper. And so what I'm getting at when I talk about this is a micro continuation packing or a pullback. So price went up, we pulled back, we consumed liquidity in this base here, then price left. So the next time price comes back, we can expect it to come at least as far as the previous pullback, which it did almost to the pip. And so if we just remove this here for a second, you can see that this one came back this far, and if this one was to move lower, then we would move this line lower, okay? Because we always want to be mindful of where the price level at which price returned to prior to the release higher. So we had this one came to this -1 pip, and this one managed to move a little bit through it. So we came back to this pullback because the fresh liquidity starts at the low of the lowest pullback for demand. Okay, so it came into here. This is the beginning of the buy zone. This is the end of the buy zone. And this is where it found the liquidity required to drive price higher. So we put our entry in here to buy at this child. Looks like a nice level. Okay, but failure to notice this is going to get you into trouble because price has to come back to this pullback because there is no longer liquidity available at a price higher than the lows of these wicks because it's already been consumed, or much of it has. And so much of it being consumed simply makes the probabilities of the trade working out, or this level working out in the future, less probable. And so you have to look below. Okay, where has price been back to? Where is the fresh liquidity starting? Well, it's starting at the lows of these. And so sometimes you'll have a nice area of supply or demand. You'll mark off the area like this, which is what we did. But you'll notice that our price has already been back to here. And so we have a really good idea that when price comes back to here, price is going to have to go through it in order to find the liquidity required to drive price higher. Okay, I hope that's clear. Let's move on to the next trade. This is a small one. Let's look at it anyway. Maybe this is a mistake. I don't know what that is. That doesn't look like a proper trade. It's not 1%. So we'll just take this one here, which we have here. So here we have another thing here where we have this. We probably had something looking like this. So price was going up, it went down, and then price tested this area, it moved lower, and now price started to, you can see that the lows here were getting higher. Actually, I don't like to use that tool. Let me use the other tool. It's quicker. So we had a low, so you can see that micro demand is being respected, and the supply, so here and here, is being consumed, so price is moving above those. So we came into this area here, we had a pretty decent reaction. We got stopped out, only just, and this is because we didn't put our stop in kind of a fresh area. So, I mean, this is just a very simple lesson on if you want to get into a trade to sell, you want your entry to go just below the area, and you want your stop to go just above the area. So plus or minus 5 pips on either side of the area. Or if you're on the smaller time frames, maybe a couple of pips will do. But on this one here, I mean, we put our stop right on it. And that's a little bit dangerous because the zone continues up to the high of the area. So price may have to continue all the way to the top and maybe even go through it to find that fresh liquidity that we also saw on the previous example before it's able to move down like this and continue moving lower. Okay, good. But you can see something that's important to notice here is that we have a low. Let me start drawing again. We have a low here. We have the lows. These are all the major swings. Focus on the major swings. What are they doing? Are they going up or are they going down? They're going up. We have this one, goes to this one, goes to this one. They're going higher. What is that telling us? Well, that's telling us that demand is in control on this time frame. And you have to be so aware of this. And so focus on the major swings. Okay, focus on the major swings. So you go, just do what we've done here. Focus, draw these, and just so you know what's going on. You can draw it by hand, or you can use trend lines to do it. Trend lines are a good one because they make it pretty easy. And so, I mean, it's difficult here because this looks pretty much like it's consolidating on the bigger time frames. You can see it's just a lot of chop going on there. But you can see that we have demand. All these rectangles, these colored rectangles, both the greater period and the current period, are below price. Okay, and so you have to be aware of this. You have to be super careful trading against this because the trend is up. The indicator is telling you this, and the fact that we have solid rectangles below price means that these are fresh areas of demand that have not been tested. This is the first test here. This is the third test of this area here, but they're still holding. We have some nice rejection. That means selling is potentially dangerous. So you're going to either have to manage the trade much more aggressively to get out of the trade quicker, which requires you're going to be looking at the trade constantly while it's filled and while it's working, or you can simply trade in line with the trend, which is very, very clearly moving higher. Okay, good. Let's go to the next one. Where is this one? Here it is. So we have price that's moving lower like so. We had a deep retracement, and then price is moving lower like this. We had this area here that we thought would be a nice entry. So we did this here. So we sold here, almost tested once, not quite. And this one price went up, accumulated below, and then cut through it. And then we were stopped out very quickly. Notice, I can go to this time frame, notice where the major swings are. Okay, we can do this super clearly. We've got one here like this. not focusing on the little ones because they're uninteresting to us. Okay, you can see here that we have major swings, some really nice swings. We have this area here, which is an hourly continuation pattern. So hourly is an accumulation or distribution, or if you're on the sell side. And you can see that when price left here, it moved below. But notice this low here, and notice this continuation pattern on the higher time frame. And I know that I'm kind of covering a lot of different things here, but I mean, one of the most important points I think of this lesson is that you are aware of what's going on the higher time frame. Because notice, if I want clarity, what am I doing? Am I zooming out? No. Am I using trend lines? No. Am I putting an indicator on the chart? No, I'm not. I'm going to the bigger time frames because this is what's driving price. You have to pay attention to what's going on these bigger time frames. If you're stuck on the 1 hour chart or the 50-minute or the 5-minute, then you have no idea what the major flows are doing, and you really have to know what's going on these higher time frames in order to be making cleverer trading decisions on the smaller time frames. And so here, so clearly price is moving lower. We have, I'm just going to circle these here. Okay, and you can see that we have swings, we have air, nice air like this. This is really good. This is very, very nice. We have nice, efficient trading. This is not efficient trading. Okay, so when price comes down efficiently, then it starts to kind of go up pretty quickly. This is inefficient. This is an inefficient move. And what does that mean? Well, that means that there's thin liquidity in here, which means that price is going to have an easier time moving through this, moving through this, moving through this, than it is moving through major, like nice swings like this, or even stuff like this. Okay, so when you see price race down to an area of demand quickly, that's good. That means that you can buy there with confidence. Because if price is doing this, instead it's moving down to an area like this, it means that price is balancing, is constantly balancing on its way lower, which tells us again that it's unlikely that price has to rebalance before it continues moving lower. It can just move down to an area like this, and then it can continue to move lower nice and efficiently as there is a constant distribution of selling pressure as price moves down like so. So whenever you see stuff like this, and I'm going to show a couple of examples of this as some of the winning trades that we put on this account, this is a good thing. Okay, so price came down here, we moved through this, and we came up to this area of supply, which was a 4-hour supply, and it came to it almost to the pip, and this is where we saw the big reaction. Okay, let's go to the next one. So what do we have here? We have this one here. So price is, we look to sell, let's go, this is on the, actually this is 4-hour. You can see I put a comment 4-hour. So this is 4-hour supply. And so it doesn't really look like 4-hour. Let's have a look on the 1 hour, maybe it's clearer. It's 1 hour. So you can see that we put it here, we sold here, and price cut through it really, really quickly. Well, again, go to the bigger time frames. We're going to pay attention to the major swings. And on this one, you'll notice something that's very important is that price has fed into this. We're just going to mark off the whole area because it's a bit of a big area. So price is fed into this. So this is daily demand. And notice as well that below price, where is price? Price is at weekly demand. It tested weekly demand. What does that mean? Well, that means that weekly demand is in charge. So weekly demand is driving price. So price came up to it. We managed to move above these highs. Price had a pullback in anticipation that it's going to continue moving higher. And so we're reacting at daily demand here. And so selling at the bottom, again, if we go back and we use our scale, we have a 10, we have 0. This is like a 1. This is super low probability. Okay, this is higher probability. And even this one here, is lower probability. Why? Because price has already been back here. Price has already been trading at a price that's just above the highs of this area of daily supply, which has been tested. What does that do? That brings our attention to this area, which is accumulating and then a sell-off. Okay, so price has not been back to this level before. So this is the one. This is the first one that we would look to sell at. Okay. Right, so price is doing this. We move through that pretty quickly. We go to the hourly chart. You can see again that we have a low. We have a higher low. And so price is moving higher. We have areas of demand forming below price. We have all these X's above price. And of course we have them here and here and here and here. But this is not bleeding price. This is not the bleeding edge of price. You have to focus on the right side of the chart. This is most important. And so we have demand being respected, and we have supply being taken out. And you can see when we looked here, then we shouldn't have done this, because has price been back to this area before? It has. Where? Here. And this is actually pretty much where we go to the highs. This is pretty much where we got the test. Price went into this area. This is kind of the fresh, and actually fed into this pretty ugly area of supply, and this is where we got the reaction. We had about a 1-to-1 or something like that. We had a reaction, and then price managed to move higher. And the reason that this is not interesting is, number one, we're reacting at major demand down here at the bottom. Number two, this is very poorly formed supply. So the quality checklist would have failed this immediately. Okay, good. Let's keep moving. It's going to put the template on again to get rid of the. So this is 15 minutes supply. We're going to leave this on the 1 hour chart just so we can find it. So where are we? Okay, so we look to sell here. We look to sell right. Maybe around here. Right here. So we look to sell here. Where are the rectangles? The most recent rectangles. So when I say recent, I mean attached to the most recent swing highs and swing lows. I mean, there are none here. The most recent rectangles, they are below price. What does that mean? We have 4 hour and hourly nested demand, 4 hour hourly nested demand, hourly demand, 4 hour demand. So selling here, would that be a good idea? It wouldn't. Buying here would be a good idea, but selling here is not a good idea. Why? Because there's nothing here. We have this area of supply, but look at it. Is this the picture of balance or imbalance? This is a picture of balance. That means the price is in agreement. So this is not a good place to do anything. So you want to wait. You want to look higher. And so there's nothing here on this chart that we can see now that tells us that we should be selling. Okay, if you go to the bigger time frames to find out where the bigger flows are, you can see that there's actually no reason to sell until we kind of start to get to these highs here. And this is looking at the daily chart. I know this is kind of focused on the smaller time frames, but we need to know the context of these trades. So here you can see that price is actually consolidating. Here's the low, here's the high. Would selling here be a good idea? It really wouldn't. Buying here and selling at a price no cheaper than the highs of here is what you would look to do. Ideally, you'd want to look up here where we have clear areas of supply. And so this is just kind of fiddling in the middle. So I said that, like, don't fiddle in the middle. This is fiddling in the middle. This is right in the middle of this mess. So you want to be selling at the extreme highs and buying at the extreme lows. And so on the hourly chart, taking the information that we had with us from the daily chart, we know that this is a lower probability trade. And once again, we focus on this, the major swings. So we go okay. What are they doing? And we have this, we have this. Are they going higher? Are they going lower? They're going higher. Well, this kind of challenged that a little bit, but this is just seeking liquidity, which is down here, to move higher. And so you have to keep this in mind. Then we have these areas of demand. We have a low, we have accumulation, and these are all below price, so we can actually draw a pretty steep trend line telling us that there's a really strong push higher and away from this area. Okay, let's go to the next one, which is down here. Okay, this whole area here, first of all, super quickly, high, high. They're going higher, or are they going lower? They're going lower. That means supply is in control. Okay, so we mark off the swings. And so, due to the fact that we did not manage to move above here, that means that we have more sellers in the market than buyers. You look at the strength information in the strength software, longer term, you're going to see this as well. So we're going to have the pound that is weaker than the American dollar. You can see this is very, very clear. So we're not able to breach these areas of supply, meaning we have more sellers than buyers. So don't buy. Don't buy. Price comes down. We identify this area here. And you look at this and you think, wow, this is beautiful. And this is a beautiful area. This is a really nice area of demand. But it's out of context. Okay, so it's a beautiful area. But you have to be careful buying here, because we have major swings that are telling a story of supply outpowering demand. This is a warning sign. We bought here, boom, stopped out very quickly within a couple of hours. And where did price go? Well, again, we had this whole area here was standing on a low. So we look at, let me draw again. Let me draw, and this is kind of a messy, we're just going to do it anyway. You can see that this price structure here is standing on a price inefficiency or a move. The origin of this move, which is kind of the flagpole for this flag, is standing on here. So the price that we would expect price to come back to is here. But you still wouldn't buy there. You still wouldn't want to buy there. Why? Because the flows are moving against it. And so these are going to get gnawed away, and price is very likely going to move to other areas in order to find a liquidity required to push price higher. And it's probably not going to do a lot here. You can see that we have, and this is terribly ugly, this is a lot of trading in the area. The only area that I would look to buy at is down here. So you can sell until price gets down here. Then you would start buying again. Okay. Good, back to the hourly chart. Move on to the next one. Here, we bought here. This is a 1 minute demand, 1 hour demand. You can see how we had this little price period of accumulation. Price went up. We bought here. Price cut through it immediately. Why? Well, look at this. Is this the picture of agreement or disagreement? This is very, very clearly the picture of agreement, which means that there is no bias either to sell or to buy of this area. And if we look at price, what's it doing? Is it going higher or is it going lower? It's very clearly going lower. And so you want to be selling. Okay. Yes, you could buy here, but then you'll be picking a bottom at a price structure that's out of context. Okay, and we have a look at this and see why price is reacting here. Let's go to the daily chart, and you can see, right here that we have this area here. The price rallied, it came back, so it's actually showing us where the most expensive price we want to pay, which is just here. This is the most recent pullback, which is this area of demand. So you go like this. So this is the area of demand. Stop is 5, 10 pips, 20 pips below, and the target is going to be somewhere up here. And this is not a super trade because it's not a great risk reward. We have 48 and 72. So it's not a good risk reward, but you could take this for a quick trade. Okay, so price is probably going to ripple up here. It might even go just as far back as the high here, because this is where we have some micro supply. Let's go to the hourly and have a look. You can see it here. So you can see that price is probably going to come up to here, which is where we had our our area, our order to buy. And it's probably going to maybe struggle to get through here, maybe go just above these highs, and then potentially continue lower. So another loser. Okay, let's keep moving. That looks like a weird trade. I'll take this one. Proper. We have this here. We wanted to buy here. Why? We thought, wow, we have like a really nice push away. We moved above this high. You can see we had the X's. Supply was consumed by demand. But we can also even argue that, well, actually we had like a low and a higher low, so we could have drawn upward sloping trend line. Yes, we could have, but what's the major trend doing? It's moving lower. So the flows are moving lower. So if you go to the bigger time frames, the 4-hour chart, and you can see that, I mean, price is very clearly moving low. I mean, look at this. I mean, this is like trying to catch a knife. This is very, very difficult to, it's very difficult to speculate where price should turn around. You never know what's going to happen. You have to wait for price to show you what it's going to do. If you go to the daily chart, you can see that, yes, we had an accumulation candle here. But look at these. Price left. We've already been back to this price level here. This is price returning to it once, twice, a little bit deeper. So you don't want to buy. You don't want to be buying here. You want to be selling here or buying earliest somewhere in here at the very bottom of this or down here. Okay, you have to be so careful with this. So, I mean, this is a nice inefficient price move. Price came to this area of daily demand, which is tested 2 times. A really nice rally, accumulation rally, test, a deeper test. So the area is almost gone. Price came to the edge of the area nonetheless, and this is where we're seeing a reaction. But that doesn't make this a good area to buy, because you can see the price has already been back to these levels previously. So you would consider to buy at the lows of this area here, which is roughly where we have our horizontal line here. Okay, but for the time being, we can look to sell up here, because this is in line with bleeding price. Where are the rectangles? They're above price. These are bleeding edge rectangles. These are these are not. These are older rectangles, because this is older price. And the reason it's important to react to the most recent events and swings in price is because the sentiment for this at the moment is moving lower. If you focus on stuff back here, I mean, the reason the price went up here may not even be a reason anymore. Okay, and so the orders that were put in here a year ago or a few years ago may not even be there anymore. And so you have to focus on what's going on here. It should be noted, of course, that when you have something like this, or you have a really strong move, that there's probably going to be some interest in selling here. But there was a much greater interest in selling here when price was moving away. Okay, and I think you'll find as well that on the smaller time frames, if you mark this off, price probably came down and tested a bunch of times within this week of trading before it actually moved lower. Okay, so focus on the bleeding edge price, and also notice here on this time frame, we're moving lower. So we have this area of demand was taken out. This area of demand is being tested. This is weekly demand. Tested once, tested twice. Be careful, because this is lower than this one. So we have supply. We have actually price reacting to monthly supply. And we're seeing some pretty deep pushes. And this one's gone even deeper, so I don't expect price to slow down here. It might come down to this one here. Or it might come all the way down to here. We don't know. But of course, on the smaller time frames, the hourly chart, there's plenty of trading going on. But keep in mind what's going on these bigger time frames, because it's so important. So if you're on the smaller time frames, go to the daily chart and say, okay, should I be buying or should I be selling? Well, you could be buying now, because intraday price is reacting at this daily demand. But the smarter move would be to start selling up here, providing that we don't have areas of demand that form below this area of supply. Okay, next one. This was a 30-minute area. It's here. So we wanted to buy here. Price came down. It accumulated, it went up. And we had this area here that we bought at. Horrible area. Number one, there's just nothing but agreement in price. A very clear sign that price is not going to stop there for a second. So this is just a really bad trade. A really, really bad trade. Okay, so let's go to, let's clean off the template. Let's go to this trade here. Okay, so we have a few things. This is a counter trend trade, and counter trend why? Because we have a high and we have a lower high, so we can expect the price is potentially going to wriggle down. But if you pay attention to this, I mean, what's price doing on the 4-hour chart? Well, the price on the 4-hour chart is moving higher. But this was an entry on the small time. This was actually a 30-minute entry. Notice that this price structure was standing on this leg here, and so we knew for that price structure that we did not want to be paying a price any more expensive than the 23.76, which is the pullback of this candle here. So we went down to the root, the origin of this. This is a child, and this is where we got the reaction, and then price moved away from there. Okay, so now we know that when price goes up and comes back down here, we have to look at the new structure of price and the new price inefficiency that this whole structure is standing on. So that brings our attention to, you have to ask yourself the question, where has price been back to? Price has already been back to here. It's already been back to here. That brings our attention to here. But then we have a problem here because in here there's a lot of trading in here which I don't like. So you're going to have to look lower around here. So this is probably the first area to consider for a buy once price comes back there. But that said, this was the end of January, and sentiment has a tendency to change. So yes, we were buying here, and now it looks like we're selling for the time being. So sell until price tells you to do otherwise. Currently, price is telling you to sell. Okay. Let's have a look at this one. We bought here. And why did we buy here? This is a 1-hour demand. Let's have a look here. You can see that price is moving high. We had rally, accumulation, rally. We had a test. Price moved higher. So we had, let me use this. So we had, first of all, we had a low, high, low, high. So we had very clear uptrend. Wasn't a very clear uptrend there. And I was expecting price to, on a trend line, using trend lines, they line up pretty close to where this is here. So I just simply put an order just below the trend line, which was actually marked off as a daily area of demand. So not a daily area, like an hourly area. If you go to smaller time frames, you can see it here. No, it was even the smaller one. Okay, here you can see it. So you go here, let me zoom in a little so you can see. So you find the area, and then you have a look, you dissect it. You can see that we have, price came down, it came up, it accumulated, and it left. So actually, we go like that. So this is the entry. Let's see if it's anything clear on the small time frame. You can see even here on the small time frame, you could even drop it down to there, to the low of that. So we go back here and we see where that was, and that's exactly my reasoning for taking the trade at that level. I actually went to the 5-minute chart. So it was a 1-hour area because you can see it clearly on the 1-hour chart. So if we go like this, you can see you'd mark it off like this. So it's a 1-hour area. But these long wicks that you can see tell us to go to the smaller time frames, and we had to go all the way down to the 5-minute chart in order to find the precise area that we wanted to buy at. So price went there, it fed a little bit deeper into what? Into the parent. So it went through the child, went into the parent, and this is where it found liquidity to move higher. And so we could do that whole thing again where we remove all of these, where you look at the current structure of price and you ask yourself, what's it standing on? So you mark off the low of the lowest pullback to demand, and it's here. So ideally you don't want to pay a price that's any more expensive than that. I went a little bit earlier here because the way price reacted like so, and price went through that, didn't really challenge our stop. Actually, the first time it did, you can see, because actually we got in here and we got out here. It had another test and it went through the child and went down to the parent. So this is a nice area, because this is a beautiful area, because you can see how there's such a clear and defined top. You see all of these candles, they have the highs of either the wicks, the highs of the candles, or the highs of the bodies are really, really close to being at the same price level. So when you have such a clear cut away, this is a very clear indication that this is where price is going to react at. And this is where it reacted to. Went in a little bit deeper. Let's have a look. Went to the lows. And we went in down to here, because you see we had a first pullback. Second, let me go in here and have a proper look. So we had, where are we? Sorry, I'm jumping around. I want to find this. Okay, here. So we had the first pullback. We had a second pullback that went a little bit deeper, and then price left. And so when you have stuff like this, price pullbacks, then you have a deeper pullback, focus on the lowest low. So if we mark this off, and we go right. I think I've got the wrong area. So I'm going to do this. I can't find it when I do that. So if we have a look here, so I keep finding the wrong area. So if you see that we have a low, we have accumulation, we have a low, price came down to that low, we came a little bit lower, and then we left. And this is where, let's mark this off, price came back to. Price came very yeah, okay. Sorry, of course the software changed the color to white because we're on the hourly chart. That's why I wasn't finding my red line. So price came back to the area almost precisely before it managed to move higher. So it found the lowest low since the release. This is the release. We have accumulation, green candles, and this is where it found liquidity required to drive price higher. So another very clear example, and this is great because, as I mentioned on the previous chart, when you have a nice strong run, inefficient run down to an area of demand, we start to accumulate either for 1 or 1 to 4 periods or so. Then there's a very good indication that price is going to move higher, and we have this really strong inefficient move. There's no supply here to challenge us, so we can expect price to move back to at least this high, so like somewhere within here, or this is here we have some resistance, and here we have kind of the thicketed liquidity which is in here. So this is a good trade to hold. This is an exercise, so we did the 1-to-1, but you get the idea, I think. Cool, let's have a look at this one. Here we have kind of the same thing going on, where we have this price structure is standing on this flagpole. So you ask yourself, how far has price been back to? What's the lowest low? Well, it's here. Okay, so we have that, and so you don't want to be buying for a price any more expensive than that. Look where price came to. I want to look at this, where it came to the pip. Look, this is the level. It came to the pip, and it went up. And then it came down. Okay, so this is where it found the liquidity required to stall price just for a moment. And what did it do then? Well, then it managed to, let's go to the bigger time frame. It came to where we have the release. We have the test, the pullback. Okay, we had the pullback. Where did price come to? damn it. I hope you guys can see the power of this stuff. I mean, every time I do this, I'm just smiling, just like licking my lips, and I think it's absolutely tremendous. I mean, look at this. This is absolutely phenomenal. Look at this. Had a big push away. Price goes back to the deepest retracement. This is a micro retracement. This is a search for liquidity on the small time frames. Price goes away. Don't want to go. This is the buy zone, starts here and it ends here. This is a very big buy zone, of course, but this is where you want to start to scale in. Okay, and you can see the price came back to here, to the pip on the 4-hour chart. I mean, how often does that happen on a 4-hour chart? You get this to the pip. As a matter of fact, I'm going to show you a trade afterwards on the Aussie Franc. It was on the weekly chart, and the same thing happened, almost to the pip. So I mean, here we have just another example. So look for this. This is a telltale story that this is where you want to be looking. So price came down to it, and now this is where we're bouncing. Good. Let's look at the next one. Hourly chart. This is a sell up here. So we have, it's moving lower. I think we could probably even maybe we do a trend line. Yeah, I mean the trend line overlaps pretty nicely to this here. So actually I remember talking about this one because we had our 10, which is up here. We had our 0, which is down here. Okay, so if we go like that, and so once price pulls back to this level, this is the cheapest we want to sell for. And you can see what's going on, where are these rectangles there below price. Okay, so you either want to be buying on pullbacks like this or like this. This is messy, so maybe not that one. I'll just remove that. But you wanna, if you're going to be trading counter trend, which this is because we have a low, high, low, high, then you want to be doing it at the extremes, and you want to be putting your stops where? In this white space. Because then you know that this, perhaps on the monthly chart, could be something like this, where you have a monthly close, the low of the wick here, showing us the pullback. This could be that pullback. Okay, so price comes up to that area, then we see some rejection. Okay, it could look like this on a micro level. Okay, good. Okay, let's have a look. I know we got a couple open now. Let's see. Let's have a look at this. What do we do here? Yeah, this is an ugly trade because we bought here in a mess. I don't like that at all. I prefer this, but we're going to leave that because these are incremental improvements in our process. We're going to leave that, and then we can come back to this a little bit later on, or next session, and have a closer look at this. This is a mess. I think we can all agree that there's no real reason to buy here, but we did get in at kind of the pullback. See how price went up? Nah, you know what? This is like a slap on the hand. This is not. There's nothing good about this trade. It just worked. This is one of those bad trades that work. Okay, this is the daily chart. Let's have a look on the daily chart. Oops, let me put some power on my computer. Good, we have a look. See on the daily chart, yeah, okay, here you can see it looks a little bit better, but it's still pretty wicky, these bars. But price rallied, we accumulated for 3 days, and then we left. And so we're simply taking this, and this is made on the daily chart. So on the smaller time frame, it's a bit of an ugly area, and so price will potentially kind of wriggle down into these wicks here and find the lower areas of a demand, so these micro nested areas in this daily area. Then you continue higher, but what I can see is this orange level, which tells me the price is reacting at this weekly supply just here. So that means careful, and this has not moved above this high yet, and so yeah, unless that happens, kind of clear the road, price will likely kind of feed back into here somewhere to find some liquidity to drive price higher. Okay, so go like that. We go here. Next trade, this is the dollar franc. So we're expecting price to move higher. This is on the hourly chart. So we have a look, and I just saw this. Our price kind of moved sideways a little bit. Accumulated, moved higher. Not very pretty, but we were seeing price move like this. We did have an upward trend, which is why the only reason it's working out. Additionally, we had it's another key point is that we have this area of accumulation. This is a child. This is the parent. This is actually also a child because the parent is here. So this has been tested once, twice. So this is actually a pretty crummy area to buy at. But we bought, price filled the order in this during this hour here, and then it kind of moves sideways for a little bit, and then we're moving higher. So there's a slight imbalance in supply and demand. The advantage being in the buyer's hands, which is why price is slowly drifting higher. And this is a lower probability because why? Well, price has already been back to, since the release, this level here. You can see. So this is kind of the better price to buy at. Additionally, is price going up or is it going down? Well, it's going down. This could be the beginning of a turnaround. We can see the euro American dollar starting to move away. So if we go to the weekly chart and have a look, yeah, it doesn't look very attractive. You can see we're kind of starting to feed into this area. It's been tested once, so we are challenging these lows. We could go as low as this low here, which we've actually already been to, so that's a good sign. So then we could start to drift higher from here and maybe return to kind of here, or or here, before we start to find an area to react at. Then we do have this up here, which looks pretty nice as well. But we'll leave that on and see what happens. And in the meantime, I'm going to find a bunch of trades. As a matter of fact, we can do that together now. Before we do anything, I'm going to show you that Aussie franc trade. This is on the weekly chart. Yes, so it was this one here. So price rallied, it accumulated, and then it rallied. And so we know that we don't want to be paying a price any more expensive than the low of the pullback. Notice also that we have this going on. So prices we have supply controlling, but we do have a whopping area of demand here, which is nice. And price is moving low to find liquidity. Hopefully we'll see price move initially up to here, which we've already done once, and we're going to see some trouble here. Then we're going to start moving into the thicket of supply, which is here. But I'm thinking if this manages to hold, we manage to accumulate and kind of move away, then we'll probably wriggle up to here before we do something else. But we'll have to wait and see. But you can see it's pretty expensive. If you want to hold shorts, it's not recommended. So we're earning a fair portion of interest on holding this position. But we'll see what happens. But this one, if we come down to the smaller time frame, actually my telephone, I got to find the entry of this. It's on a different account. I'm just going to pause. I'm going to find the entry. Okay, so it was the 7362 was the entry. 7362. So we'll go like that, then we'll go down to the smaller time from an hour, and we'll see where it is. Here it is, 7362. So you can see that, they're tremendous, absolutely tremendous. This is a weekly area of demand. Price came down to it almost to the pip. So let's see how much drawdown we had there. We had about 6 pip drawdown on a weekly chart. It's pretty awesome. And now we're probably going to see some kind of a divergence if you're into oscillators. So price is moving lower, but the strength of these two currencies is probably starting to change, and so then price is going to potentially move high from here, as we just outlined. But we'll have to wait and see. But that's just another really good example, I think, of how well they hold. So let's apply the default template and run through our pairs. We'll go to the hourly chart once again. We'll see, what do we have here? Well, you can see that we're slowly wriggling lower, and it's pretty messy in here. I don't like any of this at all, because we're kind of wriggling kind of all over the place. I mean, this was the trade, and it's been taken, and so now we have to look for kind of the most recent pullback, and there's a lot of it. So there's a lot of trading, and so I think that the only area to look to sell would be kind of in the highs. I'd have to go to the bigger time frames and see. I mean, I have an order to sell here still. I really like that that area up here, and price has not gotten there, so I'm hoping that it goes a little bit deeper before we start to move lower. But we'll go to the next pair. Actually, that's kind of the same thing. We'll go here. What do we have here? We have, you can see that, let's go to the daily chart. What are we doing? Well, we are, looks like we're seeing a very, very strong push higher. So if you're going to look to sell, you're going to have to look for where price has not been back to, and price has already been back to here. So you don't want to be selling for anything cheaper than the 125.89 area, which is close to the big figure. And then it kind of brings us kind of up into here. So the sell zone begins here. Then we also have resistance here. We can just mark it off like this. I think we're probably going to start to see some selling again once we kind of move up into here, because we had this, which was tested. It kind of went down, so this is kind of like the flip zone here, because like it was respected, it cut through it, and now we're swapping. So we might kind of feed up into here and start moving lower. Let me remove all these. Let's move, see if we can see something clearer and nicer. What do we have here? We're reacting on 4-hour supply demand. Let's have a look at it. And this is nice. When we had like a push away, this is the lowest price that you'd want to pay. Price came just below that. Good. And now it's moving up here. And then we have this order here, which is not terribly interesting. So I'm just going to remove all these. I think these are old, stale orders. I'm going to go like that. We have a look, and you can see that, I mean, longer term, I mean, this is moving high, and you can see that we're reacting to this daily demand, which is really good. Really good. So ideally, you want to be buying here. So you go to the smaller time frames and you wait for price to come back to a micro area of demand to buy it. Okay, because we're reacting at some demand on the daily chart. And so you can buy, even though you can see that we're in a downtrend. This is like a 15-minute downtrend. So if you go to the daily chart, you can see that we're actually in an uptrend, and this is the first time back to this area of demand, which is great. So you can go in here and you can look for a place to buy, and it's kind of already happened. You can see how we had this area here, price went up, we had the first pullback, second pullback, price went a little bit deeper, and this is where price released. I missed a trade on dollar CAD the other day, which looked very much similar to that. Let's have a look at the dollar CAD, yeah, which is, it was just in here. This is, no, it wasn't there. Let's have a look. You can see that we have price really moving higher. I mean, really moving higher here. Go to the daily chart. What's it doing? Getting close to this. You can see these wicks pulling back, pretty unclear. So the edge of the area that we'd like to buy at is actually the low of this candle here. So I wouldn't look to buy until price got down here. If we do manage to move above these highs and move above here, well, then we could look to buy something like this. Let me go to the small time frame and have a look. Looks like this. So we have this here, which I like. We're going to move this one down here. Already prepared for us. And I like that because this is the most recent swing. You can see we're paying attention to bleeding edge price, and I think this is good. So we'll leave that there. We'll find another one, pound yen. Here we got out of our pound yen trade, we bought down here. So if we go to the daily, what are we doing? We're moving higher. you can see that, I mean, we're having a strong push higher. Looks like this is a really nice area. If price comes back to here, that would be interesting, but you want to be paying attention also to bleeding edge price. And bleeding edge price is here. So on the hourly chart, I mean, you could look to sell here. I've got these orders all put in there. Something like that. We'll leave that at our 1-to-1. And if we have a look on the 30-minute chart, just to get a bit of clarity, 15-minute maybe, we can see if we can find those pullbacks. You can see we had, and this is no good. Yeah, so ideally we'll leave it at that because we want something to look at. We'll leave it at that. We won't fiddle too much. Okay, let's have a look at the Aussie CAD. Had a test of this. We are testing something below here. Go to the daily chart. What are we doing? Okay, we're in a very clear uptrend. You can see that price is moving very clearly higher, so you want to be buying. So where would you want to buy? Oh, this is the ideal place to buy. There's nothing really in here on the daily chart to stop price from falling lower. So you go to the smaller time frames, and you can see that we have this area of accumulation just here. Prior to that, when we had test, price came back to that, and below that we had a pullback. Price came back to that. Now we're moving. I think we're probably going to continue wriggling lower. This is the first area, but it's very small, 10 pips, too small. And so I would certainly look to buy down here. We're going to take the low of this. We're going to put the stop just in here because this is a pullback, release, accumulation. The lowest low is where we want to be. Has to be the earliest price. Let's put this on. So we're going to go, this 33 mini lots. We're going to be buying at 97.38. 97.05. Okay, and this is 4-hour H4 demand. And we'll do the entry like that. Let's do a 1-to-1. Like so. Good, and we'll leave that alone. Aussie Franc, what are we doing? We're reacting to that weekly demand. Let's have a look on the daily chart, how we're really moving lower. You can see, but you can see, I mean, we could sell here, or you could look at this. So we'll look at this with the lowest low, which is here, this candle here, the lowest pullback. Go to the hourly chart and see if we can look at it. And it is somewhere. Here it is. It's here. It's reacting on this little piece here. And so what you could do here is you could do something like this. I mean, that would be an interesting area to buy at. Price has been back there, so you could. This is like a kind of a bigger trade. You could do something like this and wait for price to come back there. Only 70 pips. It's not so much. Go to the daily chart so we can see the context. And you could argue if that would be an interesting position or not. I don't like that it's kind of sprawled out, so I would probably do something like this. Just move that entire pin bar like that, and I would buy here. Then you could argue that this is a child and here's the parent, so we're probably going to have to go into the smaller time frame and have a look at that. Let's do that. Where's the bottom? You know, we're going to have to go back here and mark this one off. Delete that one. And we're going to go to the hourly and find that beast. Here it is. Okay, so here it is. So we had equilibrium and then price broke away. So that's what we had there. That's better. We can see it. Yeah, this looks pretty interesting. So this area here, I like this one. I like this here. So we'll put that like that. I like that, and I like that the price tested, showing us the edge of the area, so we'll put it to the low. And there's our entry right there. So we're going to buy. Or it'd be nice if price continued down like that, and this whole inefficient price move, because then prices has a higher likelihood of returning back to something like this. So we're going to leave this, we're going to put that in 17. 17. This is a pending order to buy. 71.80. 71, we'll put 88. So we get the spread, and 71.43. 43. We're going to put that like that. We're going to put daily demand. Daily D1 demand. I'll put this back here. 1 to 1-ish. We'll have a look at another one. Right, I shan't, we're already over an hour, so I shan't keep doing this. I'll just update the list now when I'm done with the video. Then we can go through those again during the next session. But I hope this was an educational video. I hope you understand why the initial trades that we took had a higher likelihood of not working out in contrast to the ones that we've taken most recently. And so you have to pay attention to the trend on the major time frames, on the bigger time frames, context. You have to focus on context. You also have to focus on where price has already been back to, because this is typically going to be the price level the price is going to return to in order to find the fresh liquidity. Good. Okay, I'll wrap it up for the time being, but thank you all so much for watching this. Have any questions, shoot them to me in the forum, and otherwise I'll see you guys next time.